Hi, Bryan Hancock here. Today's episode of the Timberchase Financial Wealth Brief, we are going to talk about charitable giving strategies for this year and next year. If you are planning to give to charity in 2025, you may be able to do more good with the same dollars with a few easy adjustments. And I'd like to walk you through some charitable giving moves that families sometimes overlook and how to think about the timing changes that are coming in 2026. Full details are in our article, Charitable Giving Strategies for 2025 and Beyond, linked in the notes. What changed at a high level? Well, first of all, with the new law in 2026, you need to be aware that there is a 0.5% adjusted gross income floor for itemized charitable deductions and a cap on the benefit for top bracket donors. In plain speak, that means the more money you make, the less the deduction is worth in 2026. That makes 2025 a planning window worth evaluating. Here are 4 charitable giving strategies worth exploring. Strategy 1, bunching deductions. If you don't itemize every year in your tax return, you might want to consider bunching 2 or more years of giving into one tax year, so itemizing gets you above the standard deduction, which was increased significantly in the 2017 Tax Act. What this means is that if you are making charitable contributions, but you are still taking the standard deduction, it is possible that you are getting no deduction for your gifts. One way around this is to bunch multiple years of giving into one year to get over the standard deduction. We show a simple 2-year example in the article. Strategy number 2 is donor-advised funds. A donor-advised fund is a charity that allows you to make a large gift to them, and they will hold and invest the money until you are ready to give it to your favorite charity. It is a way to bunch without rushing grant decisions. Donor-advised funds used to be for the ultra-high net worth crowd, but now they are a great tool for many families, but it takes a little bit of understanding and tax planning to make them work. The third strategy is the qualified charitable distribution. If you are age 70 and a half or older, a QCD will allow IRA dollars to go directly to charity and count toward your required distribution. This is excluded from your adjusted gross income and can help with things like the IRMA, Medicare premium tax, and Social Security taxation. For some people, the QCD is the most tax-efficient way to give to charity, but it takes a little bit of understanding, and jumping through these hoops will allow you, potentially, to give more to charity and pay the government less. The fourth strategy, which sometimes can be paired with the donor-advised fund, is to donate appreciated assets instead of giving cash. Consider giving long-term appreciated stock or fund shares, or even a rental property that's been in the family for a long period of time. Donating to a donor-advised fund can be very flexible, and wealthy families are advised to at least explore this in aggregate. So what are the timing issues with 2025 and 2026? Because several limits kick in for 2026, some families may evaluate whether accelerating larger gifts into this year aligns with their goals and their cash flow and their overall financial plan. On the other hand, if you won't itemize in 2026, note there is a small above-the-line deduction for certain cash gifts that start next year. The point is coordination, especially around bonuses, income, marginal tax rates, capital gains, Roth conversions, and required distributions. For step-by-step examples and some key thresholds, read our full piece, Charitable Giving Strategies for 2025 and Beyond, in the notes below. We also link a companion article called How the Government Can Subsidize Your Charitable Giving, which explains some of these same concepts but in more detail. Please know that this discussion is educational and is not intended to be individual advice. There are many nuances to making sure that you don't have an unintended consequence to your charitable giving plan. Talk with your tax professional, your attorney, or financial planner before taking any action. If you want help pressure testing a 2025 giving plan, let us know. And check the notes for links to the full articles. Leave us a comment or subscribe for more wealth insights. Thanks for listening and watching.